Francois Savary, hello.
Hello.
Nice to have you back again. TSMC announced really good results last week and even better guidance. What are your thoughts on this?
It's very interesting. It's one of the signs that people were expecting. There is a lot of cyclicality in semiconductors, and the numbers for the fourth quarter were better than expected. But what the people really liked was really the guidance, which was extremely good and telling you that the cycle for the semiconductor is on an improving trend. And that's one of the reasons why the tech stocks performed so well by the end of last week, over the last few days of last week. And I think it's very, very interesting in many regards.
Is this going to have a knock-on effect on the Philly Semiconductor Index and obviously Nvidia? Nvidia's been so strong this year. Can it keep going up like that?
Very interesting question because this week we will have Nvidia reporting the numbers. So you have great expectation now because they came out in the last few weeks with new products that have supported the stock's price. I think that people will take a very close look at Nvidia. But at the end of the day, if TSMC and Nvidia are telling us that really the trend that we are seeing in AI and new chips and etc. is confirmed, it could support the semiconductor index upward in the coming months.
Is Nvidia the kind of company that opts to not give guidance in between official announcements every quarter? So
Yes,
is there anything that we're not expecting, therefore?
we are expecting, you need to take a look at the numbers. What is very important is to look at the numbers. Is there a confirmation that the new product are sold the way they are expecting? What is the impact of China? Because remember that with the measures that were adopted by the US, the China exports are going to be reduced. Are they able to compensate that? Are they really going to get into a different segment of the market and different region that are going to help them to get rid of this problem, which is the China problem? So very interesting numbers that are going to come, and don't. It's not so much the guidance that is important; it's the numbers that you are going to judge if they are really able to deliver.
All right, with the S&P last Friday at record levels, China just keeps going the opposite direction. Nothing seems to be able to stop it. Their GDP wasn't that bad recently. How's your take? What's your take on this?
It's very, very frustrating in a way. End of last year, I was saying that people need to be careful with China and that maybe things have changed. Maybe that the government was going to do. Investors are very frustrated by what is happening in China. Last week, they decided not to lower interest rate, confirmed today by the major commercial bank in China, deciding not to lower their rates. So there is a lot of question and frustration about the fact that it seems that the government is not dealing properly with the situation. Nevertheless, people need to keep in mind that last week it was announced that the government will issue a lot of long-term debts, and this is not something that is, I would say, that we should overlook. It's something that could be quite significant because it's very rare that the government in China resort to those kind of measures. I think it's only the fourth time that they decide that the central government is going to issue long-term debt that will not be in the budget. So very frustrating situation. I think for the time being, we lack clarity about China. I know that some big houses get very happy and say it's time to buy, there is valuation. I still think that people need to be careful and judge by the fact and not by the expectation.
What kind of facts are we waiting for in China? What could be the thing that could make us change our mind about these levels of stock market rates?
I think that one of the key feature remains, first of all, they need to take some measures to fight the deflation fears. And to me, it goes through a new stimulus program. I think that they should do something on interest rates. And I think that the third element that is still lacking is a wide plan to deal with the real estate issue, something that they have not provided the investors with yet.
Are you talking about the shadow banking problems?
Partly the shadow banking, but more how are they going to deflate this real estate bubble that is deflating, but how are they going to deal with that over the medium to long term? Because real estate is a key issue still in China.
How much empty occupancy does China have, do you think?
I think it's quite. I don't have the number in my head, and it differs from big city to second tier city, but it's elevated. And what is also very important is the fact that consumer confidence is so low right now that even if there was a higher occupancy rate, it doesn't mean that people would purchase because people need to be more confident. And for the time being, the Chinese consumer is not very confident. You have all the numbers showing that. Retail sales were not particularly stellar last month. Look at what is happening with luxury goods in China. Clearly, people have understood that there is something that is problematic.
Coming to Japan now, they made new highs this morning, new 33-year highs. The yen is getting close to testing last year's lows against the dollar. What's your take on that?
Everything is connected. At the end of the day, everything is connected to the Bank of Japan. The Bank of Japan is going to give its decision this week about interest rates. Clearly, they won't do anything. What
I think
the
really.
pro Yeah, I think that they won't do anything, and there is no point for them to act too quickly. You had the tsunami, this earthquake and tsunami in Japan by the end of last year. It's providing with some uncertainty concerning economic development in the short term. Then you had inflation numbers coming the right way for the Bank of Japan. Inflation is coming down. So for the Bank of Japan, there is no point for them to try to act too quickly in reversing the course of the current very loose monetary policy. So this is impacting the yen. The yen is lower, and then it's providing support to the stock market because it means liquidity is there. It means that exports are going to be easy. So at the end of the day, there is all a logic that is pushing the equity market upwards.
So you're saying this allows the yen to go through last year's lows and start testing 160 around that level then?
I think so. But nevertheless, I keep in mind that by the second quarter of this year, before I was thinking that it would be in the first quarter, I think by the second quarter of this year, the Bank of Japan is going to change course of monetary policy. I think that by the time the situation will be clearer for them to act. And it means that I would not short medium term the Japanese yen. I still think that the yen is going to appreciate when the Bank of Japan change course in monetary policy.
Coming to central banks, it's a big week for central banks, in fact, next week as well. Talk us through that, please.
Very important central bankers as a decision these next 10 days in Europe and in the US. Clearly, what we had last week with Mrs. Lagarde in Davos, she said that by the summer, the interest rate should be lower and that they should do something as the summer is coming. In a way, in the US, they are trying to get the same message, even if they are less precise than the European in that regard. I think that what people need to have in mind is that the worst thing that could happen today, to my point of view, from the central bank and the Fed, is to lower interest rates too early. It could be very dangerous, not only for the real economy, because it could again feed into renewed inflation at a moment where we have some uncertainties concerning price development, and second, for financial market, which is something that is very important. You have now in the US $6 trillion invested in money market fund. The worst thing that central bankers could do, especially the Fed, is to give hope that very quickly they will lower interest rates, bringing all that money out or some of that money out of money market fund and going into bonds and equity, feeding into a possible bubble on financial assets. Never forget that most of the recession that were produced in the course of the last 20, 30 years were produced by financial shocks and financial bubbles. So this is what you want to avoid. So I think that central bankers should provide a message that there is no point in lowering interest rates in the short term, that they want to make that by the middle of this year. And I think that what I'm expect from them in the coming events that we have from the Fed and the ECB.
Some commentators have been talking about money market funds and the fact that you could have an outflow of money market funds into the markets. That hasn't really happened to the extent that some commentators were expecting. Are you surprised about that as well?
No, because at the end of the day, if you want to keep your money short term, you get a very good return. And that's the point. You know, if you lower interest rates, then it means that the short term remuneration is reduced, so you have an incentive to go longer or to go for equities. And that's the reason why it's very important for the Fed not to give a message that there will be a quick cut in interest rates, and the same by the ECB, because otherwise you will have those kind of flows that could develop, and it can be very dangerous, not only for the real economy, as I said, because then there is a threat that. Don't forget what is happening in the Red Sea. Huh? You have a lot of development there. You know, the price of transporting goods is increasing significantly. So there is a price, there is a shortage in some key elements for production. Look at Tesla, look at Volvo. They said that they are reducing production because they are lacking some of the elements they need to produce. So don't forget that what is happening there. There is some uncertainty. So I think it would be wise from the central bankers really to endorse a message and give a message to the market. We are going to act if the conditions are fulfilled by the middle of this year.
What are you looking out for this week?
I think that you have very important statistics. First of all, you have the US GDP for the first quarter, expectation of 1.8. Yes, it's a decrease from the 4.9% experience in the third quarter, but very important number. And look at what is private demand doing and etc. What is consumption doing. So that's one of the key elements. And then you have forward-looking indicators that are very important. All the PMI indices will be published. US, UK, and Europe. You will also have a key statistics in Germany, which is the IFO. That's a very important one. And by the end of this week, we should have the most favored measures of inflation for the Fed, which is the Price Consumer Expenditure Index. So I think those are the numbers I will watch very carefully this week.
Francois, it's always lovely having you. Thanks very much indeed, and see you next week.
You're welcome. Bye-bye.
Bye bye.